If you didn't know, there's actually one section in the Income Tax Act where you can roll over with arm's length parties. That is, you don't have to pay any capital gains or pay any taxes if an arm's length party or someone unknown purchases your shares. And this falls under ITA 85.1, share for share exchanges. This is a very interesting part of the Income Tax Act, and I'll quickly give you a rundown of it. In theory, if you have a purchasing corp, a buying corp, I want to purchase this vendor corp, and this corporation is a public corporation, they will try and purchase your company. You are a sole shareholder. You own 1,000 shares of vendor corp. Your paid up capital is 1,000, or your PUC. Your ACB, or your adjusted cost base, is also 100,000, and the fair market value is 350,000. So you own a vendor corp. Perhaps you run it yourself. You're the sole shareholder. Now, this company wants to purchase your shares. However, they don't want to purchase it in cash. They want to give you shares of their own company, i.e. they want to exchange shares, their own shares, for the shares you own in vendor corp. If this happens, you have the ability to roll it over at cost. That is, you don't have to pay any tax on this at the time of the disposition, which is very interesting. Every other thing we looked at, there is a tax implication. If you looked at Section 85, the Section 85 rollover, that was something else. That was something entirely different. This is not, Section 85 is not related to ITA 85.1. If you want to know what a Section 85 is and the rollover with non-arm's lengths, if you want to know what a Section 85 is with non-arm's length rollovers, do click my video that I did in the past. It'll give you a really good rundown of what that is and how it works. If you do have any tax or accounting questions, let me know in the comments below. Coming back to the structure. So this is the original structure here. Now, the next structure will be pretty much the exchange that occurs. This exchange, you'll find here that we no longer own these shares of Vendor Corp. These shares will go to Buying Corp, and in exchange, we're going to get shares of Buying Corp back. Buying Corp is going to get all 1,000 shares, the PUC at 100,000, ACB fair market 350, and we're going to get 5,000 shares of Buying Corp, fair market value of 350, and they're trading at $70. Because we can actually roll this, our ACB and our PUC will be the original ACB and PUC that we have of the shares that we let go of. And that'll actually be the same for the Buying Corp as well. So they're going to get a PUC of 100,000, an ACB of 100,000, and we're going to have as well the ACB of our Buying Corp at 100,000 and our PUC at 100,000. If we were to look at it and write this down really quickly, our POD will equal to 100,000, our ACB will equal to 100,000. So our capital gain will be 0 because our POD minus our ACB will be 0. So that's pretty much how it works there. There's no change. We want to make sure that as if there's no change between the shares that we owned of Vendor Corp and Buying Corp. So our ACB and our PUC will be transferred at the same amount. And the reason why we do this and the reason why they allow this is because of the share structure after. You'll see that we, the shareholder, own Buying Corp, who owns Vendor Corp now. And the thing is, we've pretty much have an indirect change. So we still own Vendor Corp indirectly through owning Buyer Corp. And because of this, we can choose to roll it. If we did not choose to roll it at cost, there would be a capital gain of 350,000 minus 100,000. So that's 250,000 of taxes that we would have a capital gain on, and the inclusion at 50%. So 125,000 we would be taxed on. Now, this is very interesting. If you do own a business and a public corporation is looking to purchase you out, do the Section 85.1 rollover. You don't need to even have an election, so it's very straightforward doing this. And again, this is very favorable for the shareholder here because otherwise they would need to pay capital gains of 125,000. If you like this video, make sure to like and subscribe. It really helps me with the channel. Remember, this is general information, not personalized tax advice.